And, in Setswana we say double feli, which essentially means the bad news never ends. There's a hike tomorrow after inflation. What do we expect?
Essentially what it means is that you're going to be paying more for your home loan, your car loan, or anything you have taken a loan up and you're paying interest for. And the reason for that is, there's a number of reasons. I mean, one is that inflation's rising. And when inflation rises and the forecast rises, the Reserve Bank has ammunition to raise interest rates. So the Reserve Bank may raise rates by 0.5 percentage point tomorrow. That's the prediction from many analysts, with the inflation figures showing price rises remain stubbornly high. Now, Statistics South Africa says consumer inflation was unchanged at 5.9% in April. A higher inflation forecast supports the case, as I said, for the bank to raise interest rates. The latest figures indicate growing food and transport costs are the biggest drivers. One analyst says because higher fuel prices are now impacting on other costs, the Reserve Bank will act more aggressively tomorrow.
These pressures on that I've just spoken about will put pressure on the disposable income of households and on the input costs and margins and profits of businesses. So it's going to be a fine line for the Reserve Bank in terms of how fast, how aggressive they're going to hike interest rates to stem inflation expectations. But on the other hand, be careful not to kill the bit of growth we've got, as we are struggling to gain momentum for a number of reasons. From load shedding to floods to whatever else. We are just struggling to get momentum, and high interest rates now could also be negative in that front.
Well, that MPC decision from the Reserve Bank will take place around about 3 o'clock tomorrow afternoon.